see any EM markets that are worth going long at this point? A few that come to mind, especially for long-term investing ideas: India, Singapore, South Korea.
Singapore is not an EM. We're very bullish on South Korea.
Yeah.
Haven't had a sick. So India's a weird one. So India doesn't necessarily score particularly high on our crisis risk index. It doesn't necessarily score particularly low either. In the context of inflation's rollover, India should do well. But at the same time, India has cyclical headwinds in terms of steepening base effects for growth. So I kind of neutral. I mean, I wouldn't be sort of pounding the table on India. What I will pound the table on is South Korea and Taiwan. Certainly here from a cyclical perspective and actual from a structural perspective, but for right long term on the US dollar. I don't know how that really impacts India, but it's certainly not negative on it. But again, just named 8 countries. South Korea and Taiwan.
We get a lot of ideas floating around.
The Brazil, Russia, China, Indonesia, Mexico, and Turkey on the short side.
Yeah.
If you do that, it doesn't really matter what you're doing with the other like 20 or 30 EM countries.
I like we talked about this a while back, but on India, so like I don't know if they're coming out of Quad 4.
Yeah, they were in Quad 4.
They were in Quad 4. I don't know. Yeah. But the point is, like, all the money is concentrated in New York, and it's concentrated like in the U.S. or like London, you know.
Yeah.
So like people are using that vehicle as a way to play this theme. You know what I mean?
Yeah, for sure.
It's like money gets pushed there. It's so that's why. Is that why you say, well, here's the GIP setup, but
like so.
Maybe
usually
the flows matter more.
Yeah, I think the GIP setups really matter when there's no overarching macro fundamental driving anything. When the dollar's not trending higher or lower, when rates globally aren't trending higher and lower, when there's not, volatility globally is not trending higher and lower. When those things are not happening, then the idiosyncratic country risk factors really start to pick up, or cyclical factors start to pick up. When one of those or multiple of those things are happening globally, higher or lower for either of those major factors, then you really start to think about structural risk according to these economies. And what's happened in the year to date is that global macro volatility has trended lower. Credit spreads, certainly domestically, have trended lower. Even in Europe, has trended lower. You had the dollar trend lower. That has sort of perpetuated a sustained recovery, certainly in capital flows for a lot of these emerging markets that were most impacted on the downside by a lot of those things happening over the trailing, 3 to 5 year period. So again, you were just sort of bouncing off the lows cyclically, for a lot of these exposures. Again, if we expect some of those things to reverse, particularly what we think is the biggest factor, which is the U.S. dollar, to reverse sustainably over the intermediate to long term. So that's something we don't want to be chasing, those 6 countries that I identified on the short side of EM from here. But it's been a good trade, certainly for Mexico and Turkey in the year to date. Much less so, on a relative basis for Indonesia, China, Brazil, and Russia. Certainly relative to the stuff that we like on the long side.